What's going on, everyone? Welcome back to the buildatrader YouTube channel. In this video, I'm going to be talking about identifying trend direction. To be a good technical analysis trader, you have to understand the basics very, very well and have a good solid foundation developed. And that's the point of this video and the next videos. I'm going to be teaching you guys the very basics to help you develop a foundation before I begin to teach you some more advanced technical analysis to apply to the charts for your own trading strategy. But without further ado, let's cue the intro.
Don't stop running towards your dreams.
Alright everyone, here we are on the charts. We're looking at the US dollar against the Canadian dollar, the old loonie. Alright, so like I said in this video, we're going to be identifying trend direction. Okay, now some very basic information here if you don't already know this. An uptrend is a series of higher highs and higher lows, right? So right here I'm drawing a uptrend, or illustrating an uptrend with these arrows. It's just a textbook uptrend, just so you guys can get an understanding if you don't already know this. It's very basic stuff, and we're just gonna rush through this real quickly. So you have a low point, a high, a higher low, higher high, higher low, higher high. This is your basic anatomy of an uptrend, right? It's how the market moves. Now look at this to the left right here where the arrow is, where the mouse is. Get a high, higher low, higher high, higher low, higher high. This is exactly what I just drew. Correct? It should be correct. If you don't agree, then well, that's just on you. Okay, so now downtrend is what? Series of lower highs and lower lows, correct? Yes. Okay, low, lower high, lower low, and lower high, and lastly one more lower low. And as you can see on this chart right here, where the mouse currently is, made a low point, made a lower high, made a lower low, another lower high, then one last lower low. Okay, this is exactly what I just illustrated. This is what a downtrend looks like in the market. Okay, so I'm going to remove these drawings here, and we're going to look at this area right here where all these yellow candles are, right? Okay. Now using that knowledge I just told you, the basic understanding of what an uptrend and a downtrend looks like, you can see here that on this area it's predominantly bearish. The market is predominantly moving to the downside. There's a lot of momentum to the downside, as you can see, right? Again, we can see here these two candles are bullish. They are not yellow, they're black. These are bullish candles. Okay, now you can see on this monthly time frame, because this is the time frame we're currently on, there's not too much data here. Okay, each one of these candles represents one whole month. Okay, so this whole candlestick was the month of May, this is June, and we're currently on July. As you can see, there's 15 days and 22 hours left until this monthly candle closes. Okay, so you can see here that the market's moving down, right? So let's drop to the weekly, one time frame lower. Now each one of these candles represents 1 week of data. So currently we have 1, 2, 3, 4, 5, 6, 7 candlesticks of data here. 7 weeks, almost 2 months. One more candlestick will make it 2 months of data. This weekly candlestick has 1 day and 22 hours left until it closes. Okay, there's that much time left until the market closes. The market closes on Fridays at 2 o'clock and reopens on Monday. So that's why it has 1 hour or 1 day and 22 hours left until it closes. Okay, now you can see on the weekly here that obviously the momentum is still down, but right in this area it's pretty bullish, right? And remember how I illustrated that uptrend to you? Higher highs, higher lows. Just make a quick one right here. You can kind of see that is what it did. A higher high, or a high, higher low, higher high. Okay, I'm gonna remove these arrows I just drew here and add this one. As you can see right now, right in this area here, it's moving bullish. Okay, we're going to drop to one more time frame lower, to the daily time frame. Now each one of these candlesticks represents 1 day, 24 hours. Each candlestick is 24 hours. 5 of these make up the whole entire weekly candle, or 6 if you include the Sunday that it opens on market. 6 of these candlesticks create the weekly candle. Okay, Now, using the uptrend illustration I showed you, what's currently happening? The current market behavior is bullish, right? With these additional details, as you can see, like on the monthly and weekly, you couldn't quite see it because there was less candlesticks, but now going to a lower time frame, you can see way more data, right? Yes. Now in a downtrend, you can see it makes lower highs and lower lows. We're looking at this left side here, and it was bearish. Okay, now we're looking at this right side. This area, what this price action, this movement, this behavior did not happen on the left side. You can see these situations are totally different, right? So we're looking at this here, and you can see how when the market was trending downwards really hard with a lot of bearish momentum, these two situations are different. Okay, you can see up here, zoom out a tad, things moving downwards still. Nothing started going up, right? I mean, like, you can say like, okay, kind of went up here, but the overall momentum was still down. You can see that's what happened. But then there's something changed here. What happened? Market broke and made a higher low and a higher high. You identify that's where the trend changed. Now this is just a really basic example of a transition. We're going to dive into a lot more of these in future videos and examples, but I'm just showing you the very basics of identifying the trend on each time frame. Okay, this is what you have to do when you're a trader and you're trying to learn technical analysis. You need to correlate time frames, the higher time frame and the lower time frame with each other, using the details that the time frame can provide. So for example, this daily time frame, using it to see more details in the weekly, because there's 6 candlesticks here for each one candlestick on the weekly, so you need to see more than that to see what's going on. Let's drop down to the 12-hour. So each one of these candlesticks is 12 hours of data. It takes 2 of these to make 1 daily candle, right? See the trend still up. Let's drop down lower. Now you can see here it gets a little bit messy, because you're like, well, it's up, now it's down. What's up, what's down? Okay, that's what the intraday traders are trading. They're able to capitalize on this based on certain technical levels and stuff. And we'll get into that, you know, once we get these basics down, right? See, went up, market went down, and went sideways, and started going up again, right? Now I know I'm drawing these very quickly because I can see this. This is how my eyes work. You know, I have lots and lots of chart time. I've been doing this for quite some time now. And if you don't recognize this that quickly, that's okay. That's the whole point of these, you know, educational videos. But these arrows are to help you train your eyes to see how these candlesticks are moving, how I view them, and how many other traders view these movements as well. All right, it's not all just random candles. You know, they're moving a certain way. All these candles are telling a story. You know, if you can read the candlesticks, then you can know what's going on. Same with like you know, the Egyptians. If you can read the hieroglyphics, you know exactly what the heck they were going on about, right? So we're gonna go one more time frame lower, just the 2-hour. This is the last time frame we're going to, and I'm gonna add a few more arrows. Now you can see the 2 hours a lot more detail, right? Each one of these candles is only 2 hours. 12 of these candlesticks equals 1 daily time frame, because 2 hours times 12 is 24 hours. Okay, so it takes 12 of these to make a whole day. And with more details, obviously, there's lots more trends, lots more downtrends, uptrends, and sideways movement. Okay, each time frame has its own trend, its own little world. Okay, that's what you use. The more details can help you capitalize on shorter movements. Okay, just because, you know, the market's moving down completely bearish doesn't mean you can't take a buy. Okay, it's all about the current market behavior, and that's what you're going to learn as we go on into these next videos of technical analysis. Okay, but those are more advanced concepts, and you need to understand first how to even look at these candlesticks. You got to be able to read if it's going up or down or sideways. You can't know all these other things without knowing this right here. So I'm going to draw what's happening right here, so you can help. So I can help you train your eyes to read these charts so that you can take advantage of them and learn in the future videos how to apply the technical levels to your charts and to begin taking higher probability trades from these areas. Okay. Now I hope these arrows are helping, because when I first started, when my mentor did this, it really cleared things up for me. I was able to see things a lot easier. Okay, so this area up, came down, pushed up, had to pull back and came all the way down, pushed up again, came down, then pushed up. All right. And you'd be like, what type of trend is this? Well, it depends how you trade, to be honest. But this is really just more of a range-bound market. I mean, I just drew, you know, the arrows up and down and sideways. But to be able to capitalize on these shorter movements in the lower time frames takes a lot more experience, because it's a lot faster. There's a lot more details. It's easier to get faked out. It's easier to make a mistake because there's so much more data that you can see, right? And as you can see, the arrows, you know, there's a lot of up, down, sideways, you know, when it doesn't really align with, you know, these higher time frames. So here on this 12-hour, it's a lot more clear, a lot more calm. You know, it's not going all crazy how I just drew those arrows. See on here, it's a lot cleaner. Went up, came back down, pushed up again, and then had a minor pullback down here. And currently, this is where we're at in this move here. Okay, see how this is more like an uptrend? You know, the classic textbook uptrend I drew with our arrows at the start of this video. This is a lot cleaner and easier to read than, you know, what I illustrated earlier. But as you can see, even on the slower time frame, the arrows that I drew in the higher time frame, they don't totally match because there's a lot more detail. I mean, obviously you can see, you know, that's how it moved, but if you're only looking at these lower time frames, you'd get messed up, right? The answer is yes, because you'd get confused. Now, I hope this video helped. I hope this helped you get the idea of identifying trend direction and which way the market is moving, up, down, or sideways. Stay tuned for the next video, and that's all I have for you guys.